In this video, we're getting into something a lot of people have, but very few people fully understand. Homeowners insurance. What it actually covers, what it doesn't, and what all those confusing terms really mean. What's going on, everyone? My name's Eric Hunsaker, and on this channel, we cut through the fluff so you can make smarter choices with your insurance, your home, and your money. Now, homeowners insurance can feel like this weird bundle of terms and coverages that nobody really sits you down and walks you through. You buy a home, your lender tells you that you need insurance, you sign the paperwork because you're exhausted from the whole home buying process, and then you just hope it covers what you think it covers. And for a lot of people, that's where it ends. They assume everything in their home and everything around it is covered. But when something goes wrong, they find out the hard way that they misunderstood or overlooked a key piece of their policy. So today we're going to slow everything down and just talk through this like normal humans. No insurance salespeople, no corporate jargon. Just a real breakdown of what your homeowner's insurance is doing for you and what it's not. The basic parts of homeowner's insurance. So a standard homeowner's insurance policy is made up of several main sections. Think of your policy like a pie. Each slice covers a different part of your home or your life. If you don't know what each slice is supposed to do, the whole thing feels confusing. So let's walk through it in a way that makes sense. Dwelling coverage, the structure of your home. So this is the big one. Dwelling coverage is basically the part of your insurance policy. It covers the physical home itself, the walls, the floors, the roof, the built-in appliances, the structure, the foundation, anything that literally makes up your home. If a fire damages your living room, dwelling coverage steps in. If a tree falls on your roof from a storm, dwelling coverage helps pay for repairs. If lightning strikes your house and fries your electrical system, dwelling coverage helps replace it. It's designed to rebuild or repair your home in the event of a covered disaster. And the amount of dwelling coverage that you have is usually based on how much it would cost to fully rebuild your home today. Not what you paid for it, not what you could sell it for. Construction costs matter more here. Other structures, things not attached to your house. A lot of people forget this part. Other structures coverage applies to anything on your property that isn't physically attached to the main home. That could include your detached garage, a shed, a fence, a gazebo, a pool house, even a backyard fence gate. If it's separate from the main structure, it falls under this part of the policy. Most policies automatically include a percentage of your dwelling coverage for these structures, like 10%. So if your home is insured for $300,000, you might automatically have $30,000 of coverage for things like sheds or fences. But if you've got a really nice detached workshop or guest house, then you might need to increase this amount. Personal property, all your stuff inside your home. This is the part that most people think of when they picture insurance. The things you own, your clothes, furniture, electronics, kitchen appliances, tools, decor, TV, laptop, and everything in between. These typically fall under personal property. Your home gets broken into, or a fire destroys your belongings, or water from a burst pipe ruins your couch and carpet. Personal property coverage helps replace your stuff. But here's the part that catches people off guard. Most policies only cover personal property up to a certain amount, and some items like jewelry, fine art, collectibles, or expensive electronics often have strict limits unless you purchase extra coverage. So if you have a $10,000 watch collection or a ton of high-end camera gear, you'll definitely want to look more closely at this section. Additional living expenses, if you can't stay in your home. So this one sounds boring, but it might be the part that saves you the most money during a disaster. So if something happens to your home and you can't live in it while it's being repaired, like a fire, severe water damage, or a major storm event, your insurance can help pay for your temporary living costs. That could include hotel stays, renting a temporary apartment, eating out, laundry, storage for your belongings, basically all the extra living expenses you wouldn't normally have if your home hadn't been damaged. This is the part of your policy that keeps your life moving even when your home isn't livable. Liability coverage. If someone gets hurt and sues you. Liability coverage protects you financially if someone gets injured on your property and decides to sue. This could be something like a guest slipping on ice in your driveway, someone tripping over uneven flooring, your dog biting a visitor, you accidentally damaging someone else's property. Liability covers legal fees, settlements, and medical bills, up to your policy limit. It's one of those things that you hope you never need, but if the day comes, you'll be really glad you have it. A lot of homeowners bump this coverage higher just for peace of mind because legal costs can get expensive fast. Medical payments to others. Smaller injuries. So this part is different from liability because it covers minor injuries regardless of whose fault it is. So if a friend twists their ankle on your stairs or cuts their hand in your kitchen, this coverage can help pay their medical bills without needing to assign blame. It's not meant for lawsuits or major incidents. It's more like a gesture of goodwill that prevents small issues from escalating. What's typically covered? All right, so now that we know the main sections of the policy, let's talk about the kinds of events, also called perils, that a standard homeowner's insurance policy usually covers. Insurance companies are surprisingly specific about the disasters they'll pay for. Things that are usually covered include fire and smoke damage. So insurance almost always covers fire. Whether it's a kitchen fire, a candle mishap, a lightning strike, or smoke damage, you're usually covered. Windstorms and hail. Storm damage is one of the biggest reasons people file claims. This includes roof damage, broken windows, and falling branches. Lightning strikes. If lightning causes damage to your structure or electronics, that's typically covered. Theft and vandalism. If someone breaks into your home or damages your property, you can file a claim for repairs and stolen items. Weight of ice or snow. If your roof collapses or suffers damage due to heavy snow or ice, you're usually protected. Water damage from burst pipes. It must be sudden and accidental. If a pipe bursts unexpectedly, that's usually covered. But here's where people get confused because not all water damage is covered, and that leads us into the not covered category. Common exclusions. What people are shocked isn't covered. This is the part that surprises most homeowners. There's a big list of things that aren't automatically covered. Flooding. If water rises from outside your home, like from a storm, heavy rain, overflowing rivers, or melting snow, your standard policy won't cover it. For that, you need flood insurance. Earthquakes. Same thing. Earthquake insurance is separate. Wear and tear / neglect. Insurance will not cover damage caused by old age, neglect, or lack of maintenance. If your roof is 30 years old and rotting, insurance won't replace it just because it finally caved in. Intentional damage. Anything you do on purpose, no coverage. Simple. Sewer backup. Unless you buy an add-on, sewer and sump pump backups usually aren't covered. Mold. This varies, but most policies have strict limits unless you add extra coverage. High value items. Jewelry, expensive electronics, collectibles, art, these often need additional riders. These exclusions are why people get blindsided by claims being denied. They didn't understand the fine print. Understanding limits and deductibles. So this part determines how much money you actually receive during a claim. Policy limits. Every part of your insurance has a maximum payout. Your dwelling might be covered for $300,000, but your personal property might only be covered for $150,000. Make sure that these limits match what you actually need. Deductibles. This is what you pay out of pocket before your insurance pays the rest. A lower deductible means a higher premium and vice versa. Replacement. Cost versus actual. Cash value. This is huge. Replacement cost. This gives you money to buy a brand new version of whatever you lost. Actual cash value. This gives you money based on the item's depreciated value. So your 5-year-old couch? Replacement cost buys you a new one. Actual cash value gives you basically thrift store pricing. Replacement cost usually costs more, but it makes your life way easier after a big loss. Additional coverage options you might need. Depending on where you live or what you own, you may need extras. Flood insurance, earthquake insurance, sewer backup coverage, additional jewelry or art coverage, home business coverage if you run a business out of your house. A lot of people think their standard policy covers these things, but it doesn't. Homeowners insurance myths. Stuff people get wrong all the time. Myth number 1, everything in my home is covered. Nope, there are limits and exclusions, like we covered today. Myth number 2, insurance covers home maintenance. It doesn't. Maintenance is on you. Myth number 3, I don't need flood insurance because I'm not near water. Flooding can happen literally anywhere. Myth number 4, my policy automatically adjusts with inflation. Not always. Some do, some don't. You need to check. Tips for choosing and maintaining your policy. Make a home inventory. Compare policies. Know your deductibles. Update your insurer if you renovate or buy expensive items. Review your policy annually. And make sure the coverage limits reflect what you actually own. The more accurate your policy is, the better protected you are. Homeowners insurance doesn't have to feel like this mysterious, complicated thing. Once you break it down, it's actually pretty straightforward. Your home, your stuff, your liability, and your temporary living expenses. That's the core of what you're paying for. Understanding what's covered, what's not covered, and what extra protection you might need puts you in control. And then when something unexpected happens, you won't be standing there wondering if your insurance will help, because you'll already know. So if you want to go ahead and try out our home insurance survey, you'll find a link for it down in the description below. This is an affiliate link, which means we earn a small commission if you decide to use it at no extra cost to you. It helps support the channel and lets us keep creating simple, beginner-friendly videos to help you stay in control of your money. So thank you if you use them. And if this video helped you out, make sure to like, subscribe, and hit that notification bell so you never miss another video. Here on Your Money Friend, we talk about saving, banking, investing basics, insurance, and all the little money decisions that make life easier without the confusing jargon. Thanks for watching, and I'll see you here in the next video.